Jill, great to see you. So clearly small caps have been suffering of late. Is it a buying opportunity, or are they always expected to move more than the bigger cap stocks because they're just a bit higher beta?
Thanks for having me. And yeah, I think, this is a buying opportunity for small caps. We were positive on small caps over large caps for the year. And that's not to say that they're without risks, because there are a lot of things that are going on right now that have been affecting the size segment. Obviously, COVID and uncertainty over Omicron has been one of them. Small versus large caps relative performance has been very correlated with COVID case counts, COVID hospitalizations. The good news there is that you might be starting to see that turnaround, which could be a positive for small cap performance. What's interesting is if you look at the benchmarks, just mentioning the performance year to date, if you look at not all small caps are down as much as the Russell. So the S&P 600, which is kind of a higher quality small cap benchmark, is actually performing in line with the S&P 500. And when you look at sector performance within the Russell too, healthcare has really been a big detractor, and we've been cautious on that area. A lot of lower quality, biotech, some of these areas that have been dragging down the index. So sort of a lot to unpack there. But I think overall, the valuations have really been pricing in a lot of the bad news. Small caps are very historically cheap versus large caps right now.
And which of the sectors stands out to you most of all?
So within our work, a lot of the cyclical sectors right now are ones that are very cheap and rank well in our work. So, energy, financials, real estate, even consumer discretionary ranks more favorably in our small cap work than it does in our large cap work. A lot of these domestically oriented cyclicals we see opportunity in. And I think from a style or a factor attribute perspective, we like quality. So, within regimes like we're in now, where Fed is expected to tighten, we're later in the cycle. Typically, quality is a very consistently outperforming style. So, small caps that have earnings rather than stocks that don't have earnings. Value tends to perform well in these phases as well. And then we'd stick with cyclical growth stocks over secular growth stocks. Surprisingly, the stocks that have the highest expected consensus long-term growth rates within small caps are not actually ones that tend to perform well in this phase of the cycle or even over the long term within small caps.